All right. Good morning, everyone. It's a gorgeous day out there, and you've taken the time to join us today for our presentation on the 6 things you need to know about title insurance. Thank you for being here this morning. I'm Jesse Lalime with GVR Communications, and I'll facilitate today's session, which features an introduction from Brett Horton, AVP, Commercial Business Development for Western Canada at Stewart Title, followed by a presentation from John Gellard, who acts as the Senior Business Development Manager for Vancouver Lower Mainland at Stewart Title. Following the presentation, we'll take time for our presenters to answer your questions. Please write your questions in the Q&A at the bottom of your screen. Whenever they pop into your head, we'll get to them at the end of the session. So let's get started. Here's Brett Horton. Brett is Stewart Title's AVP, Commercial Business Development for Western Canada. Prior to joining Stewart Title in 2013, he operated his own law firm, providing commercial and real estate services. Brett is currently on the board of the Risk Management Association's Vancouver chapter, and previously served various organizations, including being past chair of the Canadian Bar Association National Real Estate Section. Brett is a frequent speaker at legal and real estate industry events and is recognized as a thought leader on title insurance in Western Canada. Brett, welcome. It's great to have you here today.
Thank you very much. Thank you for that nice introduction. I also want to introduce my colleague who's joining. This is John Gellard. John Gellard joined Stewart Title, what, 6 years ago?
Yeah.
So
18, 19, 6 years now.
And absolutely. Prior to joining Stewart Title, John was in the banking industry. So the two of us combined have been dealing with title insurance for a number of years. We're both based out of Vancouver here, so we both have a very familiarity in terms of how title insurance is used in this market. And we came up with 6 things that you should know about title insurance. And John, if you want to just go to the next slide here. So these are the 6 things we came up with, and I guess maybe it's a bit of a secret that we kind of may have added a few things within each of these 6 headings, but let's call it 6 themes to know about title insurance. We're going to run through this. As mentioned, if you do have questions, type them as you go, but we will have some time at the end to get to your questions. And without further, let's go to the next slide here. So the first slide. So as mentioned, I am a lawyer and I work for an insurance company. So it shouldn't be a surprise that my first slide here is a disclaimer. Anything we tell you today is for information purposes only. But I do think it is really important to keep in mind that although a lot of the things that we'll be telling you today are general in nature and will apply to most, if not all, of your transactions, title insurance, just like any types of insurance, is determined on a case-by-case basis. So if you're working on a particular transaction, whether certain coverage is available or not available is going to be dependent on that transaction. And we're also going to be giving you a number of claims examples. And again, when it comes to claims examples, those are always determined based on the facts of that particular transaction. So my caution would be, be very careful about giving any sort of, categorical advice to your client about, yes, title insurance will cover this, or no, it won't. You can give them some guidelines, but also have them reach out to either the lawyer or the notary working on their transaction, or you could have them reach out to us, or you could reach out to us yourselves. So with that behind us, let's go on to our first thing to know about. The first thing to know about is the basics. And if you want to just go to the next slide there, John. I always like to start with the basics because title insurance is one of those things where even those within the real estate industry, not everybody has a really great understanding of what it is. And I would imagine that many of you on this call do have a pretty good idea. Other of you may not have a good idea. So let's start at the basics. This is the definition that I like to use. Title insurance protects the insured from losses due to specific risks that could adversely affect interest in real property. Now, there's a number of things to take away out of this definition that are important. Probably the first one is that title insurance protects the insured. So generally speaking, when we go through this presentation today, when we're talking about the insured, we're going to be talking about your purchaser. So your client who's buying that property, they are going to get a title insurance policy for themselves. But it is important to keep in mind that on any given transaction, and in fact, I'd say most transaction, there's actually 2 title insurance policies that are ordered. One for the purchaser and then one for the lender. And sometimes it's actually the lender that's driving that. So we're not going to go into a deep dive in terms of, why lenders are requiring title insurance. They require title insurance for a lot of the same reasons that we're going to be talking about it here. But do keep in mind that those are two separate policies. We still get it from time to time where people say, oh, I will just rely on the lender's title insurance policy. And the reality is that's not an option. They are two separate policies. So unlike your fire insurance, where the mortgage is a loss payee under your policy, they are two separate policies. So that's one. Other thing to take away from this is we are only covering specific risks. So we're not snake oil. We're not going to cure everything that can ail you. Certain risks we cover, other risks that we don't. And we are talking about real property assets here. So we're not talking about the appliances in the house. We're not talking about any vehicles that might or might not come with your transaction. We're talking about dirt and those things that can be attached to the dirt. Going on to the next one there. Now, title insurance is a little different than other types of insurance. One thing that makes this quite a bit different is it is actually a one-time premium. And it's a pretty modest one-time premium. So, generally speaking, for transactions around $1 million, you're looking at around $150 for that title insurance policy. And then that policy lasts for as long as you have an interest in the property. Now, as the transaction size gets larger, that premium does get larger, but even around 2 million, I think we're looking at around what, $800 or so
Yeah.
for vastly less than you're going to pay on an annual basis, your title insurance policy is going to cover it. And as I mentioned, often your lender would require it, or your purchaser's lender are going to require it anyways. And the difference between getting the two policies and the one policies can be as little as $50. So in a lot of ways, there's a lot of good value on a title insurance policy. And as I mentioned, that policy lasts for as long as you own the property. So your purchaser, if they get a title insurance policy today, if they own that property for 20 years, that policy is good for 20 years. They never have to renew it. They never have to get a new policy. As long as they have an interest in that property, it continues. The other thing that makes us different than other types of insurance, and this is probably one of the biggest ones to kind of wrap your head around, is most of our coverage is retrospective in nature. So unlike fire insurance that you're buying in case the house burns down, or car insurance that you're buying in case you get into a car accident, you're buying title insurance in case something happened to that property in the past that causes you a loss at some point in the future. So the vast majority of our coverage is going to be what we would say as of the policy date, but in a lot of ways you can really think of that as of the closing date. So when we say things like there's no survey related issues, that means there's no survey related issues as of the policy date, permit issues. Another way to think about it is we're not going to insure people against themselves, right? So that's bad for business to insure people against themselves. So, anything that they do to the property themselves, we're not going to insure against that. So that's how we're different. If you want to go to the next slide, we are an insurance company and we share some similarities with insurance companies. And these might sound obvious, but they do trip people up from time to time. And the first one on here is that the insured must incur a loss before a claim is paid. So we are in the business of indemnifying against losses. So the example I like to use for this is if you will take the survey coverage, hopefully, and if not, you'll learn more. John will talk a little bit more about survey coverage to come, but generally speaking, you can get title insurance instead of getting a survey of that property. What are you trying to find there? Well, generally trying to find encroachment. So take this scenario. Your purchaser buys the property, doesn't get a survey of the property, gets a title insurance policy. But at some point in the future, they do get a survey of that property, and they discover that their deck is actually encroaching onto the neighbor's property. That mere knowledge of that encroachment isn't enough to trigger claim. So your client isn't actually in a loss position yet, just the mere knowledge of the problem. You would have a potential claim, and certainly you could advise us and should advise us of that potential claim, but you're not going to have a payable claim at that point. You're not going to have a payable claim until really one of two things happen. One, the neighbor comes along and says, hey, you need to remove that deck. We call that a forced removal or a forced remediation. And at that point, now you're out of pocket, right? You have to spend money in order to fix that problem. So that you would be able to make a claim then. Or the other time that you could make a claim is when you are going to sell your property And you now have to sell your property for less money because that encroachment exists. This is now a known issue. You've got to disclose it, and it would have to be substantial enough that it impacts the purchase price. And if that's the case, we would call that a loss marketability claim. So really, unless one of those two things happen, your purchaser's not going to be in a claims position. And then just looping back to what I was saying earlier about, there being two separate policies between an owner and a lender, this is a really important thing to keep in mind. If your client bought a title insurance policy for their lender because they were required to buy that title insurance for a lender's even one step further removed from that loss. So the lender, wouldn't be in a loss position until not only you had that forced removal or that forced or that marketability issue, but you'd also have to have that mortgage in default. So again, there's this idea that I can rely on the lender's policy. It's just not real, because unless you're going to default on your mortgage, they can't make a claim. So it's something to keep in mind when you talk about losses. And then the other one here that might sound obvious is we're going to exclude issues known to the insured but not disclosed to us. And again, just comparing it to other types of insurance, like if you think about it, if you've ever applied for life insurance, you have this big long form and you've got to disclose all the medical things. And if you knowingly fail to disclose, for example, that you have high cholesterol, and then at some point later you have a heart attack, your family actually might have a difficulty making a claim because you had information that you failed to disclose and that impacted their risk. So as we're talking about exclusions here, I'm going to pass it over to John, who's going to talk about more about what isn't covered, which is our next point.
Well, thank you, Brett. So yeah, point number 2 we're going to be looking at here is what is not covered. And I often like to start by just kind of going over what would not be included in a title insurance policy. And this kind of helps you understand or explain to your home buyers what risks would fall within a policy. So like all types of insurance policies, there are standard exclusions that you should be aware of. And these, I would say, are just as important as the actual coverages when assessing potential risks. And these can include risks, as Brett mentioned, that are created by your home buyer after policy date. It could be something that was allowed or agreed to by the buyer. And these could be issues that are identified in a property disclosure statement, an MLS listing, or a Strata Form B. Also, we're going to exclude risks that are known to the owner or the lender, but not disclosed to us, as Brett mentioned. Importantly, I would stress on this one, there is no coverage for the physical or structural conditions related to the wear and tear or the general condition of a property. So important to note that title insurance is not a home warranty product. We're not going to cover any and all risks associated with home ownership. It's only the specific risks that are going to be itemized within that policy. So speaking to, let's say, Brett's deck example, let's say your home buyer, they purchase a place in North Vancouver. They have a big back deck. Soon after they took ownership, that deck started to deteriorate and degrades to the point that it's not safe and it needs to be repaired. And in that instance, title insurance is not going to cover to repair or replace that deck. Also important to note, First Nations land claims are excluded and any environmental matters. So these include things like environmental contamination, asbestos, mold, infestations, things along those lines. So what do we cover? So ultimately, title insurance, it is a unique form of insurance. It offers protection against losses due to undetected or unknown risks that would affect the registered interest in title. And these risks can equally affect condos or single detached homes. And as we mentioned, with some exceptions, these risks must exist as of the policy date, but be unknown to the buyer. And we're going to go into these a little bit more, but just quickly, starting with the duty to defend, this is where the title insurer has the contractual duty. So we have the contractual duty to defend your home buyers or your homeowner's title and will pay the legal fees associated with that defense based on one of these covered risks. And we see this provision come in most often when we're dealing with fraud claims. Coverage for forced removal by a governmental authority because it was built without a permit or a required permit. And remember that this coverage is for issues existing as of the policy date, not for improvements constructed by your clients. We're going to be looking at survey coverage. We're going to touch on title fraud as well, and liens affecting title and potentially registration gaps as well. Now, known issues do come up from time to time, and these can impact your buyer's willingness or ability to close on a real estate transaction. So, as we mentioned, we don't really, or title insurance will not offer coverage for issues that are known to your home buyer, but not disclosed to us as the insurer at the time of closing. So I would say if you are made aware of, let's say, an encroachment or any other title related issue, it would be best, or I would advise, to notify us or have the notary or lawyer acting on the deal notify us prior to ordering. So at least we have the opportunity to provide potentially some custom affirmative assurance on that policy over that known risk. And really the likelihood of us being able to do this is going to come down to these 4 points here. So how long has the issue been there? How big or expensive is that issue? Who wants the coverage? So is that going to be for the owner or the lender? And who knows about the issue? So for example, if there's an encroachment that's been registered with the city for 45 plus years, no one's taken action, they don't have any interest in taking action, this might be something that we'd be able to insure over. But if it's a brand new build, and let's say this new build is straddling the lot line, in that instance, likely not. So another example, perhaps here in Vancouver, there are a number of neighborhoods here who have a municipal laneway or a right-of-way in the back that was never actually constructed when the neighborhood was built. Rather than having that laneway through the backyard, those owners just decided that they're just going to have a shared fence at the back. And really the likelihood of the city coming along one day and saying, we're going to drive this laneway through the back of your property is low. And so we've been able to provide some positive assurance in those situations. Now, I just wanted to show you guys kind of the types of claims that we see by volume. And really, as you can see by this chart, a little over 2/3 of the claims that we receive are related to survey or zoning and permit issues. And Brett's going to touch on municipal compliance in that regard.
Yes, and thank you very much. So municipal compliance is an area of title insurance that I actually think gets a lot of underplay. As the pie chart that John just showed there, you know, 1/3 of our claims are related to permit issues, zoning issues, municipal work order issues. And if John, if you just want to click ahead to the next slide there. Now, when I was in practice a few years ago now, many years ago now, I really felt that this was some of the best coverage for my purchasers, because often the searches haven't been done in terms of, you know, the searches with the city, whether or not there's any outstanding permits, whether there's any outstanding orders against the property. But even if you did do those searches, work done on property without a permit was not something you could search for. And I'm going to let you in on a little secret that you might not know, but apparently some people will actually make renovations that require a permit without actually getting that permit. So yeah, me and a little bit facetious
Go
there.
figure.
It happens a lot. People make all sorts of alterations to their property without getting permits. Sometimes they don't realize they need a permit, you know. Sometimes they know they don't, they just don't want to get the permit. But needless to say, there people do lots of work on that property without getting a permit. And if your client buys that property and that prior owner, or even, you know, further down the chain, had done some work on that property without getting the permit, if that municipality comes back later, knocks on the door, if they don't have a title insurance policy, that's their financial responsibility to fix that problem. So I think there's a real ton of value in this. As I said, this is often something that you can't search. As I put on the coverage here, this covers a number of things. So the forced removal of construction done without a permit, this would include forced remediation as well, right? So if you have to fix something that was built without a permit. The failure to actually obtain an occupancy permit. So we've seen this where, the developer had built a project, they had gotten a temporary occupancy permit, but they never got that final occupancy permit. That is a covered risk under a title insurance policy. Any existing notices or work orders. So this would be the situation where the city already is aware of a problem and they've already issued a notice against the property. Now, often those notices will be registered on title, but even if they're not registered on title, you still have your coverage here. And then open permits. This is a big one that we see as well, where somebody, a prior owner had opened a permit, they were going to do some work, maybe they completed the work, but they never got the final inspection, and this open permit is still out. And then lastly, there's certain zoning issues. Now, zoning is one that we see more on the commercial side than we do on the residential side, but we'll talk about that a little bit going forward. But let's dig into this a little bit better with some claims examples. I find it's helpful to look at claims examples again. I'll say this again, going back to the disclaimer, every claim is going to be determined on a case-by-case basis based on the facts of that particular transaction. So you can take from this to get some general ideas of how we're going to deal with the claim, but just because we dealt with it this way doesn't necessarily mean it'll be dealt with like this every time. But in any event, the issue on this one was the insured homeowner decided to do some renovations to their house. Now, these homeowners were actually good citizens and they went down to the city to get a permit for their work. And when they did that was when they discovered that there was actually existing open permits from the prior owner. And when that came to light, it came to light also that there was substantial work that still needed to be done to close out those permits. So those homeowners had a title insurance policy and were able to make a claim against that title insurance policy. We paid more than $60,000 to do the work that was necessary to close those permits that had been open. I actually think I'm not sure if this is the same claim, but we had one where it was like 12 years prior to the purchaser buying the property. So this is, I don't know, the owner just gave up or whatever. Needless to say, most people, especially when they're a relatively new homeowner, don't want to have to shell out $60,000 to fix a permit from a prior owner. So that is an open permit, an example of an open permit. We get a number of those, and we also have missing permits. And this is the one that I alluded to earlier, that people do all sorts of fun stuff to their property without getting permits. This is a pretty typical example of the types of claims we see here. So in this instance, you had your insured purchaser bought a house, and soon after received a notice from the municipality telling them to remove 3 large additions. So they had actually built additions on this. We've also had other ones where people put in basements that weren't supposed to be there, and people removing structural walls. There's all sorts of these kind of things that people do that you really wish they hadn't. And it's very difficult to search on that. And this one actually was relatively lower value in terms of having to remove those additions. They couldn't have been very big, $110,000. Okay, that's what we did. Sorry, I apologize. We actually had to get new permits to get those things authorized. So that's a good example though. We deal with things differently. Sometimes we would remove the offending problem, and sometimes we, as we did here, pay to get it into compliance. Now that's our decision. That's not the insured's decision. So that's something to also keep in mind, that sometimes people want us to fix their problem, but we find that it's easier just to remove the problem. So the deck would be a good example. Like say you had that deck and it was encroaching, it's probably easier for us to remove that deck than it is for us to negotiate an encroachment agreement with the neighbor. So unfortunately for the purchaser, they might say, hey, but I want that deck. They're still made whole. And that's how insurance works, right? We're not, people shouldn't be profiting off of it. It's just to be make them whole. Anyways, that's the missing permit one. Then the last one we have here on the claims is the zoning violation. And as I mentioned, this comes up more on the commercial property side, because on the commercial property side is where you have a much more diversity in terms of the type of zoning applicable. But this is kind of residential, because this was a residential property in the sense that it was a small apartment building. In this claim, it was actually the insured lender that was the claimant. And they had financed a small apartment building. Now, I don't remember the exact number of units here, but let's say it was 10. So they lent money on what they thought was a 10-unit building. It turned out that 4 of those units were unauthorized. And we see this quite frequently in terms of claims on apartment buildings, care facilities, those sorts of things where, savvy landlords decide that that unit's too big, and if they cut it in half, they can rent it out for like twice as much because, hey, trying to make some more money here. But of course, those extra units aren't authorized. I think it's helpful, though, to take a look at how we resolve this claim because, again, kind of going back to what I was saying about that forced removal, we might fix the problem or we might pay to just remove it. In this case, sometimes people think, okay, I have 4 unauthorized units in this building. I'm renting each of those out for, $2,000 a month, and that goes on forever. So therefore, my loss is a total loss. What's the value of my title insurance policy? That's how much you owe. And unfortunately for the insured in that situation, that isn't the way that we would assess that loss. The way we would look at that loss is we'd be like, okay, what is the value of that property as a 6-unit, a sixplex, versus what is the value of that property as that 10-unit apartment building? And then it's the difference between those two valuations is the amount that we paid on this claim. And that's typically how we deal with it. So we won't factor in that loss of business or that loss of opportunity. It really is just those values that are coming together. Back over to you, I think. Oh, no.
One more.
Forgot about it. But there's more. Hang tight. And this is a good one. Actually, it's kind of a crappy one. There you go. There's the joke. Septic compliance. This isn't one that we see a lot in the Greater Vancouver area, but certainly in other parts of the province and certainly within this jurisdiction as well, you do see properties that have a septic as opposed to sewer. Title insurance can be used for septic compliance, but it's really important that you understand the details of it. And it kind of goes back to what John was saying earlier about we're not ensuring the quality of your septic field. So if you buy a piece of property and that septic tank has not been maintained, I don't know what you have to do with the things, but I would imagine there's a bunch of stuff you have to do with a septic to make sure it stays in good working order. We are not ensuring that your septic field is in good working order. What we're ensuring is that it complies with the local authority registrations or requirements. It's also really important to kind of look at how we define that in the policy. So what we're saying is it kind of goes back to this idea of the policy date again. Well, it definitely goes back to the idea of the policy date. Is had you done a search of the local municipality or the local authority, if it's a health authority that's dealing with septic, had you done that search as of the policy date, would it have disclosed a problem? And the problems being, that it is, say, the wrong size septic field for the house it's currently done, or that it just was built without the proper permits, kind of going back to that permit coverage, and a permit was required at the time of construction. If it doesn't hit one of those things, if the local authority search wouldn't have revealed that, then it's not a covered claim. So really kind of keep in mind, it's really that idea of the policy date is quite important. Much the same way that we deal with surveys, at which point I'll pass that over to John.
So survey coverage. So really, when title insurance came into Canada, it started as a replacement to the survey. And really that's how a lot of people kind of think about title insurance. But as we have seen, the coverage that is under a title insurance policy has grown pretty dramatically over the years. So we often see when it comes to lender instructions, mortgage instructions, that you see a survey and or a title insurance policy. And they often leave that up to the legal professional to make that decision. So with that said, obtaining a policy will remove the need to get a survey. It'll save a lot of time and money as opposed to getting a survey, which can be costly and sometimes not available immediately and can sometimes delay a transaction. So survey coverage includes losses resulting from adverse circumstances that would have been disclosed by an up-to-date survey. An example of this would be if it is discovered after closing that the buyer's garage is encroaching onto the neighboring property, and now they're being forced to remove it either by the neighbor or the governmental authority. That would probably be something that falls under a title insurance policy. We've also seen instances where people's entire homes, this is mainly when it comes to cabins or rural properties, entire homes are encroaching onto another property or are actually located on another property. These are the types of issues that likely would have been uncovered if they had got a survey. And so this is primarily where this coverage will come into effect. Our first claim for a survey. So in this instance, this is similar to what I was just speaking of. Soon after completion, the insured's neighbor insisted on the removal of the driveway that encroached onto their property. Title insurance covered the cost to move the driveway, so it was no longer encroaching. And this is an example of a defect that existed prior to closing. We paid about $45,000 to have that driveway moved back. But we also have some limited post-closing coverage for new encroachments that are done by a neighbor onto the insured's property. And this is an example of one of those claims. So in this event, the property adjacent to the insured property was vacant land when they bought it. Afterwards, it was then purchased by a developer. They constructed a new building and they constructed a new driveway. This driveway ended up encroaching about 5 feet onto the insured's property. The insured then got a survey done, and that was then later confirmed that it was encroaching. And so what we ended up doing is we retained counsel in this regard, and we demanded the developer to remove that encroaching driveway and put it back onto their property. So this is one of the, as you may have noticed, almost all of these issues that we've been discussing up to this point must exist as of the policy date. This is one of those exceptions. This is coverage that can happen after that closing date. Here's another claim example for a survey-related issue. This is an interesting one. This is an encroachment onto Crown property. So they purchased a nice home right on the water. Soon afterwards, the insured received a letter from Public Works and Government Services Canada informing them that the portion of their property along the waterfront was in fact federal Crown land. And this had occurred because the prior owner had infilled a portion of the lake in front of their property, and this infilled land was still owned by the federal Crown. So what we ended up having to do, we retained a surveyor to survey the property. We confirmed that yes, this extended piece was in fact on federal Crown land. Once we confirmed that, we then paid about $8,000 to cover the purchase price, the survey fees, the legal fees, and the disbursements to purchase that land from the federal government so they can have access to the lake again and their dock. Now, boundary walls and fences. So here in BC, we extend our coverage to include issues related to boundary walls and fences. And this would come into effect essentially when, if let's say your fence in your backyard is encroaching onto the neighboring property, and this would have been revealed again by an up-to-date survey, and now you are being forced to remediate or remove or move that fence by your neighbor. This would be an event where this type of coverage would come into effect. Now bringing it back to Brett to discuss our strata coverage.
Yes. So, again, kind of how title insurance has evolved over the years. When people really thought about it as just being a replacement for a survey, and although the survey coverage is good, and thanks, John, for the illustrations of that, people would often think, well, I don't need it if I'm buying a condominium because I don't have a survey issue. The strata plan itself is a survey, so I guess I don't need title insurance. And that just isn't really the best advice. If you want to just go to the next slide there. And in fact, there's lots of coverage that is very relevant when you're talking about strata properties, and that includes things like the work order coverage, the permit coverage that we talked about earlier, things like fraud, which we'll talk about shortly. But we also provide specific coverage for strata properties in what we call our condominium and strata endorsement. So this is automatically added to any policy where the property itself is a strata property, and it enhances the policy that you would normally get by providing a few extra covered risks. One of those is, if you want to just go and jump to the next one there, is we provide coverage in the event that the prior owner had done an alteration of the common area, and that was done without authorization of the strata corp. So a few things I just want to pause here in a second. Like, we're talking about an improvement being made to the common property by the prior owner. So we're not talking about an improvement being made to the unit itself. So unfortunately, if the prior owner put in hardwood floor and they didn't get strata approval, and then the strata court comes along later and says you have to remove it, that isn't something that would be covered under a title insurance policy. What we're talking about here is an alteration that's made to the common property. So you might be thinking, well, when did that ever happen? It actually happens a fair amount, because if you think about what is common property, all decks and patios, or at least most decks and patios, are in fact limited common property. We've got same thing with parking stalls and storage lockers. And we've also seen it with like alterations, like in a townhouse, for example, into the attics, if that wasn't part of the strata, which is part of the common property, right? And we have seen people, so they would build a loft. In fact, we had one where there was a whole bunch of them had all built lofts, and it turned out none of these were authorized, and that was all into the common property. So with that, we have an example of one that came out recently, and this was an interesting one because I know we noticed this when we were preparing, that most of ours say soon after. I think that's our marketing department always telling us that it's soon after. At some point after they purchased the property, they received notice from their strata corporation that their concrete planters that were on their patio were unauthorized. And apparently these were quite large, substantial planters. And what we did is we determined that, yes, because of the size of these planters were so large, that this essentially constituted an alteration of the common property. So unlike in the picture here that you have, where that's a kind of a small planter, that wouldn't be covered. You can pick that up, throw that in the back of your car, and be compliant with your strata rules. These were large, big planters. And I think it was actually, if you think about it, like, I don't even know how you would get rid of that. Like, you'd have to get in some sort of forklift and dealing with a big chunk of concrete. That wouldn't have been an easy thing to deal with. And certainly the homeowners in this situation were very happy that we were able to reimburse them for the cost to remove those planters. They were probably disappointed that they lost the planters, but that's that. We get lots of questions about parking and storage. I mean, I think this is probably one of those stressful things when dealing with stratas, is dealing with parking and storage. There is some coverage for parking and storage lockers contained in our condominium endorsement. And it really comes down to two particular types of losses. The one would be an inadvertent omission of a separate title. So like, it's pretty rare, but we do see it. I have a claims example coming up where the parking stall or the storage unit actually is a separate title, and that was somehow missed in the conveyance, and as a result, they didn't have the parking. That one's a little bit more rare. We don't see that a lot in British Columbia. Much more common is this second point, which is the failure to disclose, or the inaccurate disclosure of the parking and storage on the Form B. So if you should certainly know that the Form B information certificate that comes from the Strata Corp needs to disclose how many parking stalls, how many storage units, and how that property is held. And if that is not done, and it should have been done, or it was done wrong, then you could rely on this title insurance coverage to correct that problem. So we do see this sometimes where, maybe the MLS listing says, yes, they have 2 parking stalls, but when you get that Form B, the Form B still says they have 1. We're not ensuring, like, even though the MLS said that they had 2, or maybe they had bought 1, or maybe they were renting 1, we're not doing that. If the Form B says they have 1 stall and they got 1 stall, then there wouldn't be coverage. But if the Form B said they had 2 stalls and they only have 1, then that would be a cover disc there. So just going to the next slide here, this is the example that we had of a missed parking spot. The interesting way is just how this kind of came to light soon after purchase. No, I don't know if it was soon after purchase, but after they purchased the property, our insurers actually received a tax notice from the municipality, and that tax notice was addressed to the prior owner, so it revealed that they didn't actually own the parking and locker unit, which were actually a separate title. And because they were a separate title, they had separate tax. And when this was identified, the resolution here was a relatively easy one to fix. Everybody was still amicable and everybody could still be found. We were able to retain counsel and pay to have the title to the parking and locker and storage units transferred back to our clients. Now, this leads in nicely to my next slide talking about taxes. So if you want to just jump ahead here. So typically, not even typically, all title insurance policies provide coverage in the event that you as the owner are responsible for taxes of the prior owner. And when I talk about taxes here, I'm talking about property taxes. I'm not talking about other types of taxes, but any property taxes that the prior owner didn't pay. The good news is in BC is that we have a really good taxing system, and people do the tax search and you can rely on the tax search. We don't actually have a lot of claims under property taxes in British Columbia. Go to Ontario, it's a whole different ballgame, but in BC, things work pretty well. The one kind of exception to that is the empty home tax. And this is the city of Vancouver. And the reason I talk about it when I'm talking about strata coverage is because so many properties in Vancouver proper are strata properties, that this may become more relevant here, but it would apply for houses as well. So any property that you own in the city of Vancouver has the potential of having an empty home tax claim or a vacancy tax. And it's important to remember that this is, one, a property tax. It attaches to the property, it runs with the land. And 2, it actually has the ability to attach to that property retroactively. So the city can claim against a property if the prior owner did a false declaration or an inaccurate declaration or didn't declare at all. They can attach that. So there is a possibility that an innocent purchaser can be liable for the vacancy tax of that prior owner. And if you need another reason to pay, a title insurance policy at $150 for the life of your property, there's one for you. You have this coverage, it's built right in. And taxes is one of those things that unfortunately we do have to deal with from time to time. Over to you, John.
All right, I think it's time.
Taxes are scary, fraud's scary. Right?
It's time for everyone's favorite topic, fraud. So Stewart Title, in any title insurer, they are often kind of just at the forefront of identifying frauds. And we are also at the forefront of trying to prevent real estate fraud from happening. And I'll bring you back to what I showed you earlier, our claims by numbers or volume. You can see that fraud makes up a smaller portion of what types of claims we receive. But you compare that to what types of claims we pay out by value, and you can see fraud makes up the vast majority. So on average, these types of claims are much, much, much more costly. So while most of these covered risks that me and Brett have gone over today must exist as of the closing date, the exception to that is going to be our fraud coverage. And since we have that duty to defend the homeowner's interest in title, protection is provided for losses arising from someone else claiming an interest in title or fraudulently placing a mortgage on the owner's title. Now, as many of you may have experienced, there has been a lot more attention or awareness by homeowners to title insurance over the last couple of years. And that's really just due in part to a number of successful frauds that have happened across the country. In almost every single time, these frauds are a result of identity theft. And there's many different schemes that they use, and these schemes are constantly evolving. Most often, it's someone impersonating a homeowner, and this is to draw out the equity out of the home by way of a mortgage. But occasionally, it is actually the fraudulent sale of someone's home, although this is much, much more rare. There's many different variations, many different schemes how they get through this. It's constantly evolving to sidestep any type of existing security measures that we have in place. So in essence, we're trying to stay one step ahead every time, but this is not always successful. And the good news is that the homeowner can rely on their insurance policy in these cases to recoup losses, cover the legal fees, to defend their title, or have that fraudulent mortgage discharged. It's important to note, I'll say, is that these fraudsters, they're not lone wolves. They don't act alone. Rather, they're usually parts of global crime syndicates, organizations, and they have a lot of resources. So it's becoming, with these resources that they have, it's becoming kind of increasingly difficult to identify frauds just via traditional methods like the eye check, because they're completely up to date with kind of the security features, and they have access to a wealth of personal data. And so because of this, we've had to shore up our underwriting. We're always kind of evolving how we're underwriting, and we're always deploying new technologies, new ID verification technologies. And I know we're kind of speaking to the homeowners right now, but also in BC, title insurance has really been driven by lenders. And that's because if they lend out to a fraudster, there's really no recourse for them to recoup those funds. So once they're out the door, they're gone. They're not going to get that money back. So instead, they have been using title insurance as a way to make themselves whole again in those regards or in those events. Generally, like I said, it's the impersonation of a true property owner for the purpose of drawing the equity out of the home by way of the mortgage. This is kind of how a standard fraud would flow. Starts with a fraudster obtaining personal information or data. They then use that data to create fraudulent IDs or income documents, really to convince the lawyer or the notary, the lender, or even the realtor that they are the legitimate homeowner. The transaction then goes through, they get that mortgage, the fraudster then disappears with the funds. In the event of mortgage fraud, sometimes they'll even service that loan for months and months after, just to kind of give them a larger window to disappear and cover their tracks. So our first fraud claim, this is kind of a pretty standard way of how it goes. So when our insured in this event, when they return from vacation overseas, they received a knock on the door from an investigator from a major financial institution, one of our big banks. The investigator informed our insured that while he was away on vacation, a fraudster had assumed his identity for the purpose of transferring his title to another individual whose identity had also been stolen. And then once that transfer was complete, that property was then used to obtain financing from the lending institution. So once he was notified, he notified us. We retained counsel. We made the necessary court applications to have the insured's title restored to the state it was prior to him going away on vacation. And it cost us about $13,000 or $14,000 just in legal fees to have that done. Now, important to note here, we're speaking to the homeowner. That lender, who would those funds that the lender lent out would be essentially gone. So if they have a title insurance themselves, then we would be probably helping them out as well. Now, here's an interesting one. So in this claim, an individual who owned a significant amount of mortgage-free properties, he lived with his adult son. The son actually shared the same name, and since he lived with them, the same address as well as his father. And he ended up impersonating his father and fraudulently transferring those commercial properties to co-conspirators. The son then paid his co-conspirators to obtain mortgages from private lenders. So a great son, right? So upon discovering these frauds perpetrated by his son, the father initiated proceedings to have those mortgages declared invalid and removed from title. Many of the lenders in these mortgage transactions had obtained title insurance policies from us, so we ended up paying out about $2.5 million to these private lenders who gave these mortgages to the co-conspirators. Brett, I believe, correct me if I'm wrong, but I think the son was actually found after he had won the lottery. Is that right?
Yes, it's funny, kind of good news story is that when this fraud happened, like people within the office had kind of, this is a pretty horrible person to like fraud out their own dad. And I guess one of our employees was flipping through a newspaper at the time and saw one of those photos of somebody holding the big check from the 649. There was that guy in Surrey. No, it wasn't the guy in Surrey. I'm just saying that. But you know what I mean? Like it makes the news when people win the lottery. And they recognized right away that it was the son. And we were actually able to get a court order to seize some of those. Well, I think we seized all the lottery winnings. It wasn't enough to cover the 2.5 million, but we were able to recoup it. Now that is pretty odd, like generally speaking.
It is.
And that's why the claims data shows, why are those claims so big is because the money is usually gone. They usually don't win the lottery. It's too bad. Like
No.
good people don't win the lottery, right?
No, hopefully not. And I mean, yeah, it's one of those rare instances where we are actually able to find the fraudster and get some money back. Because most of the time when this happens, by the time anybody actually identifies that a fraud had occurred, they are long gone. And there is almost zero chance for us to track them down. Moving on, some fraud flags. So I'd just like to share some fraud flags we've identified. I mean, we've issued millions of title insurance policies over the years, and our underwriters have been exposed to many, many different situations, different fraud schemes, some successful, some prevented. And these are some of the top flags that we've identified over the years. And it's not to say any one of these indicates a fraud is happening, but sometimes a combination of them can create a reason maybe for some pause and just kind of think about what this deal is and if it makes sense. So recent discharges, transfers, mortgages, out of province ID, power of attorneys, maybe some inconsistent information, recent change in insurance. This often will happen on a refinance. So why are they having a new fire insurance policy if they've already owned the home for some time? Payments to parties unrelated to the transaction. So this is a good one. So why are these payments going to somebody not related to the bank or the purchaser? So that is a good indication as well. Now, with this increased interest in real estate fraud or title insurance, I mean, myself and Brett as well, we've been getting a lot of inquiries from homeowners who already purchased their house, and they're just wondering, do I have a policy? How do I get a policy? So the good news is that you can really get a homeowner policy, a title insurance policy at any time. It'll insure against any future frauds, and really they just have to order it, or they have to go through a legal professional. So that would be a lawyer or a notary. And the calculation, the premium on that will be much the same as what Brett discussed earlier. So it can be as cheap as $150. So even though there's maybe not a real estate transaction taking place, they can still get this type of policy. And with that, thank you everybody for listening to us and inviting us in to speak with you. And I'd like to open it up to any questions.
Thank you both, gentlemen. That was incredibly informative and lots of great examples there. It seems like these issues can kind of flare up from almost anywhere, from, things that previous owners do to things that municipalities do to you, to those strata issues, right? It just seems like a lot. So thank you for sharing all these great examples. We've got lots of questions coming in, so we're going to just get right into it. The first question, and again, this one I believe you just referenced, but going back to kind of the beginning, we were talking about how much typically is title insurance for the buyer, and you were talking about that $150 range for properties in the kind of $1 million valuation to around 800 for something getting close to the $2 million range. Is that correct?
Yes, yeah. So under $1 million, you're going to be looking at about 150, and then as the property value climbs, so does that premium. But it's doesn't really get exorbitant. I mean, all the way up to 2 million, you're looking at about $800. Of course, if it's up to 5 million or so, it gets more and more. But that is correct, yeah. So, and again, that's just a one-time premium, and that policy will be active for as long as they own that place.
One time.
Yeah. And I will just add on that, that's for residential. The commercial policies are more expensive. So if you are dealing in commercial properties, do anticipate they don't start at $150. So
the valuations are
yeah,
far
you're
higher
going to be,
usually, right?
yeah, I mean, at those lower dollar figures, plus the dollar figures get a lot higher, but we're always happy to provide quotes. They can actually go on to our website as well. Like anybody can do this. Stewart.ca. Make sure you go to the .ca, otherwise you might end up in a different country. There is a request a quote on there, which is available to anyone.
Another question, does having title insurance remove a seller's duty to hire a lawyer to remove liens on the title to satisfy subject removal? For example, builder liens from when the house was first built.
You want this one, Brett?
No. No. That's still 100% their responsibility. This would just be a lien that the purchaser didn't know about. And we still might, in that instance, sue the seller, right? So, for example, that vacancy tax issue that I mentioned, we would probably use our rights of subrogation to try to get that money from the vendor who should be the person responsible for it.
Where would a buyer typically get a copy of their title insurance policy and contact details if they ever needed to make a claim?
So I would first recommend going to whoever did the conveyance. So if whether it was a lawyer or notary, I would first probably say approach them. They would have a copy of it. It likely may have been provided to you in those closing documents as well. That would be the first place to go. The second place would be you can call our head office, our Stewart Title Help number, and they'd be able to assist in locating a policy and in determining if it does exist. Many times people don't actually know if they have a title insurance policy or not. The most immediate way, like I said, would probably be going to that legal professional that help with the conveyance.
And like you said, it would likely have been provided in the closing documents anyways, but if they needed to, that's where you would follow up. If the property includes illegal suites, and this was disclosed to the insurer at the time of purchase, would the title insurance cover the cost to remedy illegal suites when the city issues a notice later?
So that's a good example of a known issue, right? So you are aware that is an illegal suite, so it falls under that category of a known issue and an agreed to risk. So no, that isn't the intention of title insurance.
Got a two-parter here regarding building permits. Typically, this is a disclosure of material latent defect by the seller. If seller makes disclosure and the buyer/insurer are privy to this, is title insurance still available with coverage for lack of permits? And the second part, if the seller does not disclose this, then the purchaser or new owner is likely seeking recourse via court. Does this not make title insurance moot in this circumstance?
Okay, so the first question, so you're buying the property, it's been disclosed that this work was done without a permit. That is a known issue. You could reach out to us to see if that's an issue that we'd be willing to insure over. It would really depend on what that is, whether or not we would take that risk on or not. If it wasn't disclosed and whether title insurance is moot, I mean, I'm going to say it's not because essentially that's what you're covering, right? Is this unknown. So this municipality comes along and says, you need to fix this problem. You don't have to sue the seller in order to get reimbursed for fixing that problem if you have a title insurance policy. That's essentially the essence of it. Again, we might, as the insurer, use our rights to then go after the vendor to recoup it from them. But that's just it. You don't have to get that. So if you like to go to court to fight for your rights versus not, then you can go to court. If not, you might want to look at a title insurance policy.
Is there a limit of how many claims can apply to in the policy issued? How many times you can make a claim?
There's no limit to the amount of claims you can make, but it would be important to note that for the homeowner policy, the policy amount is going to be the property value at the time of closing. So they could make as many claims as they want up to the limit up to that limit, essentially.
Mm-hmm. One question came in about the First Nations land claims and how they're not covered. Does this mean any property on First Nation land leasehold property is not covered whatsoever?
No, actually, that's a really
No.
good clarification. Yeah. So when we say First Nations land claims, we're referring to that kind of overarching, 110% of the province is currently under some form of land claim. If you are actually dealing on First Nations land, absolutely, those leasehold interests, we insure them on a regular basis. We're seeing a lot of growth in that area as well. It's probably also worth noting that when you deal with First Nations land, you're not dealing with the BC Land Title Office for the most part. I know that they're all different, but generally speaking, it's not a Torrance type system. So title insurance in that more pure sense of insuring title is a lot more relevant when you're dealing with First Nations land. So yes, we can insure leasehold First Nations land. We do it on a regular basis.
Good point. Thanks for clarifying. One of our members is asking to just kind of elaborate a little bit more or give some more examples about straw buyers, which John was kind of covering off there at the end.
So, Brendan, do you want to touch on this maybe?
Yeah, I mean, so the fraudsters unfortunately are quite sophisticated, and they've kind of determined that if you just go, if you fake your ID of a property and then you just go directly to a lender, sometimes that raises more alarm bells. So they make it look like it's a purchase transaction. And so they have other people who are involved. So, I'm trying to think from the context of a realtor of how you could probably get duped into this, so that straw buyer is, when we say straw buyer, they are a fraudster, right? They were using fake ID. They're not real, but they come to you as a realtor and they're like, hey, I like this house over here. Can you make an offer? And it might, like, you know what I mean? That's could be how you could be caught into that. Now, I don't think that, your liability is at risk there, but certainly it kind of goes back to this smell test that, if one of the fraud flags there was, does this deal make sense? Like, why does this client want this property so badly? And like, there's all these other properties that, they don't even want to look at.
That
I don't know.
urgency that John was mentioning before, right? As a
Yeah.
red flag. Yeah.
Yeah.
Yes. They want to get
And
it
none
done
of us want to
today.
be involved in fraud, right? Like that's, whether title insurance will protect somebody in the end or not, like this is just, it's bad for the industry. It's bad for the people involved. The people who are involved, the bad guys who are involved are the same people who are selling fentanyl on our streets. These all the same group of people. So anything we can do to prevent fraud, let's do that.
It's a good message. Um, Here's another two-parter. And again, you guys are great for kind of stick handling all these different examples that our members are throwing at you here. And if some of these kind of sound familiar, uh, thanks for just kind of bearing with us. If the purchaser provides, or pardon me, if the purchaser purchases a home without the proper renovation permit for additions, and the PDS disclosed the home contains unauthorized accommodation, will the buyer be covered? I think you kind of already covered that a little bit, but there's a little wrinkle in there. Number two, if it is indeed covered, once title insurance covers the cost of removal and restores the home back to code, will that subrogate and seek remediation from the previous owner for negligence? Will the sellers kind of go back and look for their money?
Yeah, so I'll try to take a crack at it. I mean, generally speaking, if it's in that property disclosure statement that this is an unauthorized accommodation, that's going to be a known issue excluded.
Yeah.
So I think that's really an important thing. If it's a known issue, generally that's going to be excluded unless you've talked to us about including it. And something like unauthorized accommodation, generally we're not going to cover that for an owner. We might cover that for a lender. Probably not going to cover that for an owner if you know that. So that might render the second part moot. But if say it wasn't, say you didn't know about it, and our remediation. So what was the second part of the question there? Would we go after
Oh,
the seller? We might. Like if we have to make a
yeah.
claim.
Or would the
Um,
seller go back, sorry, the purchasers go back against the seller, kind of, right?
Well, any insurer gets the ability to step into the shoes of their insured. So
Hmm.
that's what this right of subrogation is. So we
Hmm.
might. We're going to look at that on a case by case basis. So, sometimes we don't chase down sellers because one, maybe we can't find them. Two, do they have the money to pay it anyways? Sometimes we will, right? So
Hmm.
it's a case by case basis.
Is it true that lawyers slash notaries will mandate title insurance to be purchased if there's no site survey available?
Not so much the lawyer or the notary, but the lender often will. And then you remember on most transactions, the lawyer and notary is also acting for the lender on that transaction as well. So um, that's might be why it comes across as insuring.
Hmm. Is there any onus on a buyer when going through the purchase process to check with City Hall and do kind of their own due diligence?
The buyer? No,
When they're going
no.
through the purchase process, yeah.
Right. No, the buyer doesn't have to do those types of searches. I mean, you're unless it's disclosed in one of uh, the information pieces, so whether it's the MLS listing or property disclosure, there's no onus on them to do additional searches. That's kind of what the title insurance policy is coming into play for. So had they have done some of those searches, if they had done that, seen if there was an up-to-date survey, really it's kind of on the onus of the legal professional to do their standard searches. But the home buyer does not, no. And they would be insured all the same.
Is an interesting one. Are there any instances where title insurance is not needed or not advised to be needed?
Never.
Never.
No, I mean, I think, it obviously is a conversation that people might want to have with their legal profession. I can't say that there wouldn't be a transaction where, hey, this cost doesn't make sense. I do point out though that it is a pretty modest cost for the coverage that you're getting. So I would imagine most transactions would fit into that category.
Does title insurance only cover permit fees for missing permits? The example here, what about demolition of the additions that were added previously? Is it related expenses like waste disposal, utility disconnection, site prep, those kinds of things?
Yeah, it really is going to be determined on a case by case basis. That, claims are, we gave claims examples that, fit onto one slide, but, really
Mm,
that we have adjusters, we have people who are looking at it. It's a lot more complex than just, in this situation, this is how we're going to handle it. So we might look at a situation, sometimes we'd be like, okay, this is the cost, and it includes the remediation cost, demolition, removal. Or we might say, hey, the value of that property is now less, so we just write you a check for the value of that you've lost. Or we might go to the city and see if we can negotiate some sort of settlement, right? So there's all sorts of different approaches that we might take, and that those approaches will be determined on a case by case basis.
case by case, right?
Yeah.
Uh, One member is looking for some resources. Do you have a cheat sheet we can share with our clients showing some of the examples for both detached and strata so that they can see the value in a policy? You mentioned your website before. I'm
Yeah.
guessing you might have something like that there.
Yeah, I'm thinking we do. Can you think of something offhand, John?
Yeah, well, I mean, there are brochures or information sheets available on our website. If I'm also happy to provide those as well. Kind of just goes through the key coverages that are in a homeowner policy. Might even have some claims examples. So if that's what they're looking for, they can find that on the website, or they can come to Brett or I.
John volunteered, so go to
Yeah,
John.
or just come to me.
I see
And
both of your email
300
addresses
people on
once.
the call, John. They're
yeah,
all
yeah,
emailing you right now.
Or yeah, if there's a place where we can distribute that
So
as
maybe
well.
we'll send that through
Jesse,
with the
we can provide
material.
that to you, whatever's easiest.
Would that be good? We could send
If
that through.
yeah, we're gonna, and I'll mention this towards the end, but we're gonna send a recording of this event and any resources that you have to share.
Yeah.
We're gonna be sharing with the attendees here as well. So you'll get this a version of this slide deck and some other resources you can use in your
Perfect.
email in the coming days. What documents need to be provided to the insurance company to obtain title insurance?
Well, depends, really. It's again like on a case by case basis. The legal professional, the lawyer, the notary, they're the ones that kind of determine they collect those
Mhm.
documents, and sometimes they can just order the policy, and we don't need to see any of those documents. Sometimes we do. It really depends on the property and whether it has to be manually underwritten or not. The title search would be a pretty standard document that we would want to see. But it really depends on the transaction. And if we have any concerns about it, we may need additional documents. So it's
Sure.
hard to say an overarching what we need. It just depends on
Yep.
what the deal is.
There's
Exactly.
so many different property types and things, right, that come with, again, as you pointed out in those examples, kind of their various issues where things can crop up. So, um, so this is going back to one of the examples you gave, and I think somebody's just looking for a little bit of clarification. And regarding the fraud example where property was sold and remortgaged, the title insurance allowed the victim to remain in the home and retain their title back. That's correct?
Correct. In that one, yes.
Yeah.
Yes, correct. Because it was transferred to another fraudster. So the straw buyer, essentially.
Mm-hmm.
Um, yeah. So we were able to revert that title back.
Great. What happens should any insurance company provider go bankrupt?
That's a good question. Well, we are regulated by OSFI, which is the Office of Superintendent of Financial Institutions. So we are heavily regulated. So title insurance is regulated as heavily as any other insurance company. There is, much like there is with the deposit protection insurance for the deposits you make with a bank, if there is a similar thing for licensed insurance companies, where if an insurance company goes bust, there's a fund available that covers insurance claims, and we're part of that as well. So yeah, it's we're heavily regulated. We'll just leave it
Heavily
at
regulated.
that.
Yeah.
And I think, I mean, it's also important to note that we don't just operate in, you know, in the West, in BC. I mean, it's a quite a large, Stewart Title is quite a large company, and I think we've been around for what, how long, Brett? Over 100 years now, which most people wouldn't really get or guess.
Mhm. Yeah, there was actually a question earlier, kind of a more general question about title insurance. This person had kind of heard that it was more popular in Eastern Canada and maybe not as popular here in Western Canada. Is that something that rings
Well,
for you, or?
I mean, the torrent there's this idea that the torrent system that we have in BC, which is phenomenal, it is probably one of the best land title systems in the world, and I'm not just saying that that's true, versus what you have in Ontario, where there is more questions around title itself. So title insurance, you almost have to get it in Ontario. Like I don't think that there'd ever be a transaction where you don't get it. Likewise, like I mean, in the United States is another example, right? Like everybody gets title insurance down there. What we see in West, what we see in British Columbia is a lot more focus on these off-title matters, right? So these compliance matters, the survey, work orders. But fraud is becoming a bigger and bigger driver as well, right? Like people want that fraud protection, and the land title office, although if you are frauded out of your property in BC, so if somebody legitimately sells your property out from under you to not a person part of that fraud, yes, you would have a claim against the land title assurance fund. But that land title assurance fund, I think, has had like a handful of claims in its entire existence. And that's because that isn't your typical fraud. Your typical fraud is they're getting in, they're getting out. They don't actually want to deal with a bona fide purchaser. It's all fraudsters, and that's where you don't necessarily have that claim. So I don't know if
Yeah,
that's a long answer to the question. That yes, we
that's
see a
great.
lot more in Ontario than you do out
Hmm.
here, but we see it a
Hmm.
lot here, like
Hmm.
hundreds of
Yeah,
these a day. Yeah.
for sure. So we've got we're gonna just go with three more questions here before we're gonna kind of wrap up. For anybody whose questions we haven't gotten to, again, John and Brett, the emails are there. I think Brett was volunteering John a little bit more, but whoever you want
No,
to
you
reach
can.
out to,
I'm just joking.
whoever
I'll
you
take
want to
it.
reach out
We're
to, both,
happy to
both
talk.
of these
Yeah.
gentlemen will be happy to talk to you. So if we don't get to your question here within the next three questions, just know that you can reach out to Brett and John. These next three questions are a little bit more of kind of specific example questions that maybe we can get you to dig in here before we let you go. So the first one is for company-owned residential strata property. For a period of time, can this company still get title insurance?
Yeah, absolutely. So we are insuring the owner. So in that case, it would be the company that is the insured. And absolutely, we see that all the time.
Mhm. This one is getting even a little bit more nitty-gritty for retaining walls built in the past between previous neighboring owners. How does title insurance determine if the retaining wall was mutually built between the previous owners now that the new neighboring owners are claiming encroachment?
Ooh.
Okay.
Saving
I
saving the
think
easy ones for last.
I think that the key thing to remember here is that we don't need to determine whether it was agreed to in the past or not. If your purchaser bought that property with that retaining wall already there, and that retaining wall is encroaching, that would be, and that I think the other thing to note is, and that retaining wall is what we refer to as a boundary wall, like that, is on the thing. Um, that would be a covered risk. Now that one would still be liable to that deductible and the limit, but it's no fault. We're not necessarily looking for who built it in the wrong spot. We're just about making the homeowner whole.
Perfect. Here's the last one. You buy title insurance, and several years later, unscrupulous contractors place a lien on your home claiming you owe more money than what was agreed. You refuse to pay. Will title insurance fight to clear the title?
Yes. Right. I'm going to say that, but I also going to caveat with that. It really would, again, depend on the context here, right? Like, so they would have to be claiming for work that existed prior to the policy date. So if that contractor came along and said, you contracted for this work and you owe the money, that would be a post-policy date issue. So it really has to be something that arose prior to that policy date. But that's the type of thing. But if it was an outright fraud, right? If this is like I'm just a fraudulent contractor putting fraudulent liens on property to entice people, I think with that fraud coverage then would be covering in on that. So again, this is why I say, right at the beginning, it's really important not to make any, really firm statements about what title insurance is going to cover, but, just this general ideas of like, these are the kind of things that, how do you deal with it when that happens?
Awesome. Uh, John, Brett, thank you again so much for your time this morning. I see we've got about a little over 300 people who have been in here listening to you give all these examples and throw all these great questions at you. So thank you for taking the time and being with us this morning. We really appreciate it.
Yeah, thank you very much for having us, and thank you everybody for hanging in till the end. We appreciate it. Have a great day.
And just again, we'll be sending out a recording of this event and any other kind of supporting materials that Brett and John provide for us here in the coming days. So you'll be receiving that in your inbox real soon. And just for you all to keep aware, there are several upcoming events that you should know about. Tomorrow is our AI versus virtual assistants, What Realtors Need to Know event. That's an online event. On May 28th, we're holding our City of Burnaby municipal event. That's going to be out in Burnaby. That's on May 28th. Same with our How Buyers Assess Building Condition and Identify Major Repairs Strata event with Tony G event 2. That's also out in Burnaby on June 3rd. On June 5th, our Building Blocks Assembling Land for Tomorrow's Projects virtual event. On June 11th in Vancouver is our Empower Her Unlocking Financial Literacy event. Come up to Whistler on June 16th and enjoy 18 holes of golf at the Realtors Classic Golf Tournament. And on June 19th, Disclosure and Dilemmas, staying on the right side of the law. Thanks again for joining us today. Thanks for all the great information, Brett and John. We will see you all later.